All right. Good afternoon. Good morning. Hope everyone's doing well. We're going to do a review of these 13F filings from the various hedge funds. And by way of background, so a 13F filing is a requirement for certain SEC registered investment advisors, including hedge funds, to file. There's a 45-day lag. So what's great is we get to see the cards that leading hedge funds institutions are holding. And that data is as of end of June. That'd be 45 days ago. What's great about end of June is that you are also near a local market top. So we get to see how folks were positioning around that. I like this exercise, one, for idea generation. We found a stock called Tidewater through this process. Don't own it now, maybe in one or two accounts. Really don't own it anymore. So there are a lot of interesting ideas you can find here. We also spotted Nvidia early through this process last year. We just saw a bunch of hedge funds were loading up on this. And then we did our own independent thesis, research, and validation. You can't outsource your thinking to anyone. You have to always independently validate. But it's a good way to spot check your views against other views in the market. And also it's great to find counter signal, right? I think the Saudi Arabia Sovereign Wealth Fund is a great source of counter signals. So we'll take a look at that too. But hopefully you've all been enjoying the rally we've seen, right? This morning, we saw that unemployment claims dropped, beating expectations, number one. Number two, we saw retail sales beat expectations. What's the number one sector right now in the S&P 500? It's consumer discretionary. The U.S. consumer is not dead. Third, we're seeing inflation continue to improve, right? We saw that starting Tuesday with the producer price index coming in favorably. So all that's good news. Macro looks pretty good. A lot of people freaked out not too long ago, and hopefully you all participated. Obviously, we were on the right side of that. We wrote about that in our newsletter, and on Monday of the flash crash, we said, we were buying. So hopefully you all positioned correctly. By the way, as I go through this tracker, feel free to ask questions. I can line them up on the screen and we can talk through them. First, I'm going to go through what are the main highlights from a just hedge fund positioning overall. Then we'll talk about specific funds and managers everyone likes to take a look at, like Druckenmiller and Michael Burry and others. Then we'll talk about specific companies, and we'll also see what I call them like front run ideas, meaning if you see a large institution's got a concentrated position and they're a seller, they still have a large position, but they are selling. I think that's kind of interesting. Obviously, Bill Ackman's in that position right now with Chipotle, and Warren Buffett with Apple, and maybe Altimeter with Snowflake. Okay, so I'm going to share my screen here. By the way, to my knowledge, I don't know any other group that does this as thoroughly as we do, or in the way that we do. And certainly if you find anyone that does that, please let me know. I'd love to take a look. I posted this online so you can take a look at the tracker yourself. And the way it works is we have a couple dozen managers over here, organized by category type. It's hard to get the precise category sometimes. You have the manager name. You have top positions. So you can see their top 5 positions. These are ranked. So number 1 is their top holding. New positions where they're adding capital. And then the other bucket here is reduced positions. So you can see Warren Buffett's top holding is Apple, and his number 1 position he's reducing is Apple. So he's trying to get out of that, right? I like to focus on the top and the new positions. New positions are new ideas. It's always satisfying if you can find a good idea, you can independently validate it, and you can get in at a better price than the hedge funds themselves. That happens sometimes. Again, provided that you have a good research to validate here. So let's go through a few highlights. So first off, Amazon is in the pole position now in the top holding across funds as of the end of June, right? So they may have repositioned since then. Let's take a look at Amazon here. Amazon, I'm going to share my screen. So end of June is around here, and this was the kind of most favored name across this cohort. You also had Nvidia Actually, yeah, Nvidia shows up 4 times as well. So Nvidia was competing with Amazon for that pole position. Meta's in there twice. You see Taiwan Semiconductors in there once from Lone Pine Capital. And so in the number 2 position, you have Apple. So Apple shows up 4 times. This is new, actually, because prior quarters, we haven't seen Apple in that type of position. Although I would note that, these are quant funds that were picking up Apple, Point72, Millennium, AQR, and Man Group. And the point of that is that these funds have very high turnover. So it's highly unlikely or it's difficult to have a read through as to whether this position is still there or not. I still like to track what they're doing because maybe they're long a position and short an index, for example. Maybe there's a theme or pattern at that time. What else? So here's another observation. So Tesla is not in a top holding position. It's not even a top 2, top 3, top 4. I don't see anywhere here. Top 5. I don't see anyone even buying it. We've also been bearish on Tesla for reasons we've discussed around valuation is more expensive than anything in Mag 7. The earnings growth is limited. The margins are under pressure. They've got competition from China. So we think that's pretty rational. What are the biggest new ads? So we talked about Apple, Broadcom, which is going to report, I believe, next week. And you've got Qualcomm. That's notable. We actually also were adding Qualcomm over the last few weeks too. So what's fun about this study is you don't know who's doing what. You don't know who's doing what at the time. So you've got to make your decision, and then we have this 13F. We got to look around and see what cards people are holding. You can see Qualcomm was a new position for Tiger Global, for GQG Partners, for Whale Rock, and for Millennium. I actually like those funds too, so feel like we're in good company there. So what are the hedge fund favorites in order? So we do a count of this. So Amazon, most favored, Microsoft, Nvidia, then Apple, Google, and Meta in that order. We like Meta, but Meta, is or was certainly at the end of June, quite a bit expensive. So what else? I mentioned point number 6, Tesla's the least favored amongst the Mag 7. Microsoft and Meta had the highest number of reduced positions. The most sales in Mag 7 were there. That also makes a lot of sense. Let me show you Microsoft. And I'm going to share my tab here. And what you see here is the trailing PE ratio for Microsoft. Again, end of June's right around here, 37.4 PE ratio. And if you look at that on a larger time frame, you can see that that's near peak valuation for Microsoft. So it's very rational to sell Microsoft at this time. Totally makes sense, right? How about Meta? So Meta, similarly, around this time had an elevated valuation. It wasn't peaked where it's been in the past, but relative to the current bull market was, on the pricier side. So those decisions make sense. When people say valuation doesn't matter and in the short term, I'd say they're wrong, especially when valuation is at an extreme. Healthcare and biotech sectors getting traction with new positions in UHN and ISM. I think we can do biotech almost separately. It's a kind of like whole different world. It is a very interesting category because there are a lot of losers in biotech and a handful of winners, and it takes a lot of skill to pick out the winners. You need deep research to do that, and we've included a number of quality funds here. On the semiconductor side, the 2 biggest ads were Broadcom and Qualcomm. I want to share my screen back here again. Good questions are coming in. I'll get back to that in a moment. So on the fund specific side, let's take a look. So I like David Tepper. I think he's a really original thinker. Been doing this, 4 or 5 quarters in a row, and get to see kind of the personalities and thought process around how they do this. But he had a big bet on China in the prior quarter. It looks like that bet on China has since been somewhat reduced. He had more names from China here, but Baba is still his top position. And the rest looks like kind of the who's who in Mag 7. Surprisingly, no Nvidia there. Maybe he owns it in a later position, but it is not a top 5 position. So that is David Tepper, and it looks like he didn't reduce or close many positions, so just kind of staying the course there. What about Druckenmiller? All right, this is quite interesting. I take a close look at what Stanley Druckenmiller does, given his track record. So, as you know, he sold Nvidia last quarter, timed it very well, and he bought a bunch of calls on IWM. So it looks like he sold the calls on his IWM, and he's got certain bets in a few stocks. One is VST, which is the utility we own, incidentally. So we like this name. I won't walk you through our thesis here. We won't have time, but within the utility space, we think that's a great idea. If they can deliver on their earnings growth expectations, or even 2/3 of that, then this should do quite well. Forward PE of 14. And obviously these utilities are needed to power the data centers. So what else with Druckenmiller? So COHR, Copang, NTRA, obviously you don't see Nvidia here. MAA, let me talk about this one. This is one of his new ads. This is a stock I've been looking at for a long time. I don't own it. I wish I did. I wish I'd pulled the trigger on this. Kenny Pasternak, founder of Knight Trading Group, actually told me about this idea a few months ago. And I always am skeptical of any idea anyone tells me. It's probably a strength and a weakness at the same time. I think he told me about it like right around here. But if you look at MAA, so these guys provide, this is a REIT, and they cater to the Southeastern United States. Southeastern United States has good demographic trends. Think like, Charlotte, North Carolina, let's say. You've got growth in population there. Labor costs aren't as expensive. So this looks pricey though, right? Like 39 forward PE. But the trick with these REITs is that you got to look at the free cash flow, because a REIT can depreciate their CapEx, their debt burdens, and that is going to create a higher PE. The appropriate metric is really price to free cash flow. And if you look at this REIT on that basis, you're going to see a more attractive multiple. So it should be here on the multiples tab. Price to earnings, price to book. So let's see, 18.38 billion market cap, and free cash flow of 1.13 billion, right? So this is much cheaper than it looks like compared to that 4 PE, like at least half. Obviously, if you owned it a couple of months ago, would have been an even better bargain. So yeah, he's buying REITs. He's buying at least one REIT. I think probably one of the best REITs. He really nailed that. Another one is Philip Morris, and there's a few funds I saw buying Philip Morris. Let's take a look at Philip Morris now. Okay, so yeah, that's had one hell of a run too, right? Like, seems like he did pretty good timing Philip Morris also. Philip Morris hadn't been going anywhere for some time, and now it's got momentum. I'm gonna actually type in Philip Morris into our little calculator here and see what we can learn quickly about Philip Morris. So one is, this is a stock that is a value stock, of course. Hedge funds like it. It's got good technicals. Analysts don't like it very much. Analysts have low price targets. It's not highly shorted. It's generally an ignored name. I think the main takeaway from both of these buys is that Druckenmiller's orienting towards value. And by the way, we've been doing the same thing. We're talking about this growth to value transition, right? Think about his two largest buys, MAA and PM, are on the value side of the book. So that's notable. He also bought Nelly, Mercado Libre, which is like the Amazon of Brazil. Let's talk about his top position here, Coherent Corp. I don't own this. I don't have a strong view on the name either. Maybe it's something that we should take a closer look at. again, he bought this several months ago, back in April or so. So we also don't know how he's positioned currently. And yeah, my factor model is not a big fan of this name because it's expensive and it's highly volatile, and it's fairly popular. So it's not kind of my type of stock, but there you have it. So let's keep going. Let's see. Woodline Partners and Renaissance, they've been reducing their holdings in the GLP-1 theme. That would be Eli Lilly and Novo Nordisk. I think that makes sense because Novo Nordisk was, at the time when we sold it, more expensive than Microsoft. That doesn't make any sense to me. Microsoft has true recurring revenue through the software business, and that's long duration cash flow, whereas Novo Nordisk is going to have licensing expire, right? Their patents are going to expire at some point. So that stream of cash flow is just not as high quality as Microsoft. Obviously, they're going to have competition coming too. What about Altimeter? Take a look at this. So Altimeter. So Altimeter, their number one position is Snowflake. We've been bearish on Snowflake, but they've also been selling Snowflake. It's been the number one stock they've been selling. Let's take a look at Snowflake. What's happening there? Well, first off, it's got 191 forward PE. So if I can live to be 245 years old, I can get a return on principal unless I grow earnings dramatically. But obviously, this thing has been in a bear market for quite a bit of time. Databricks announced a large transaction in the last few days, big M&A deal. Snowflake did $1 billion M&A deal a few months ago. These things have gone from CapEx light to CapEx heavy, spending money on GPUs. So I think this just category is going to be in a challenging position. Snowflake up 60 basis points today, which is lagging technology 2.7%. So you already see that weakness. If you look at WCLD, which is a cloud index, you can see the weakness here as well. Snowflake is underperforming that. So what else? Meta, number 2 holding. I like that idea. I wouldn't make it a number 2 holding though. And although I love me some Meta, I think it's a strong vision. They're executing AI. They're not priced in for AI. But I think there are other names like Google and Nvidia that I might want to wait a little bit more. Obviously, Nvidia started to rally recently, but Meta is a core position for us. These are just kind of tactical adjustments I'm talking about. So Uber, how about Uber? So I believe the Saudi Arabian sovereign wealth fund also owns Uber. So here's Uber. Uber's been in a downtrend. Uber is kind of interesting. I think they benefit from illegal immigration. So that helps attract drivers, attract supply. That means it expands the network. I believe that thesis, which we wrote about back in around January or February, is probably priced in. 28 forward PE, the dominant market leader. I don't have a strong view on this business. It's got a decent return on equity. But how about Lyft, their competitor, which has been forgotten? And I believe there's at least one manager that owns Lyft. So Lyft clearly hasn't performed as well. It's substantially cheaper, 14.4 PE. There's some pukage that happened here, also happened around here. And it looks like it's kind of making an attempt to recover. Let me go to my trusty factor model and see what the factor model has to say. So the model prefers Uber. Depending on how you look at it, actually, it's kind of mixed. It says that both of these stocks are expensive. Hedge funds do own both of these names in a statistically significant kind of way. And the analysts have high price targets on this, and revisions are being revised up. Maybe Lyft is worth a study. I don't know. Got to take a closer look. So what else in Altimeter's portfolio? So Nvidia in a number 4 position. I think that makes sense. Microsoft at number 5. I'm less excited about that idea. Okay, what about Bill Ackman? Let's take a look at what Pershing Square has been doing. Okay. So we know Chipotle Mexican Grill has been selling. He's been selling that. It's his number 2 position, and he's been selling Chipotle. And it looks like Hilton's his top position. So we actually wrote about this last quarter before the 13Fs were published. You can take a look. We said restaurants are highly overvalued. You should kind of not own them. Even today, Chipotle Mexican Grill is more expensive than Nvidia. I find that really remarkable. I don't think it deserves that valuation. So, here, this peak here is when Chipotle announced a 10-for-1 stock split. Incidentally, it had a short-term bump, and then it dumped, and it's trying to make its way back. I don't think this is a good idea. Bill Ackman is selling it. You should be too, is my view on that. Not financial advice. So what's he doing? He's rotating into another idea, which is Nike, right? So we saw some news around that the other day. Let's come back to Hilton too in a moment. So Nike's had one hell of a rally the last couple of days. One rally earlier this week was the disclosure that Bill Ackman was buying the stock. By the way, that kind of happens. These one-off events. You look at like JetBlue. Carl Icahn someone announced he's bought JetBlue, and you had this spike on this one day, and then it gave back. So don't overread into these things, right? Traders will reprice it for a day or two, and then you have to ask yourself whether it's a good thesis and whether institutions fall. Here it is. Carl Icahn news right there. I got the highlight right there. That was actually local top, and then it sold off. Obviously this is in a different technical position near the tops as compared to Nike, which are near the lows. And we saw the retail sales report come out today and last month, and both of them beat. The first 6 months of the year, retail sales reports have been horrible. My view is that the worst has been priced in. And that seems to be the case. That's what we're seeing. Look at Nike, up 3.67%. I don't own it. We gave a hard look at this name, by the way. We looked at this, Lulu, Ulta, as did many of these other managers, right? Warren Buffett bet on Ulta, although it's a small position. So these are agonizing decisions. Great brand here. We'll see if they can recover their wholesale distribution model, which they took an axe to in a bid to become a leading direct-to-consumer play. That strategy, of course, didn't work, and they're feeling a lot of pressure in China. Clearly a great brand, though, and great products. So, but, one of the themes you can pick up here from Ackman's approach and others is that he's looking for a quality business and looking for some kind of dislocation. In the case of Chipotle, if you remember a few years ago, there were issues around like sanitation and hygiene, and the big news scandal, and the stock totally dumped. And that's when he bought Chipotle, built a substantial position in that. I think that was the right call at that time. And what's he doing with Nike? It's doing the same, similar idea, right? There's a lot of negative news around Nike, and he's leaning into it. I think Nike's still a bit expensive. Like Nike's more expensive than Taiwan Semiconductor. I think Taiwan Semiconductor is a monopoly. Nike's not. They've got competition. I'd probably lean in the other direction, but that's the approach he's taking. And he did that with Google in February. We obviously did that ourselves too. We were buying Google aggressively in February with this whole death of search from OpenAI nonsense was out there. But you see a lot of funds take that approach, and it makes a lot of sense. You find a high quality asset that's been dislocated because of temporary negative news flow. And if you have the right read on it, then that can be an opportunity. So what else? Michael Burry, always fun, a highly original thinker. I mean, you look at the names, they just don't overlap with other names. So heavy bet on China. Baba, top position, just like David Tepper. He's got a bet on Baidu. He's got a bet on JD. So what's Shift4 is here. How about that? Payments company. Shift4, that was not on my bingo card. And you can see Shift4 has rallied. This is probably Michael Burry 13F news. Maybe someone got the leak ahead of time and bid this up, but that looks like the Michael Burry effect. 19 4 PE. I'm not a huge fan of the payment space. I think there's way too many firms, big crowded, but exceptional CEO in Shift4. What about MOH? Molina Healthcare. Well, maybe this is interesting. Less people talk about this at the very least, right? So I don't know this name. We've been looking for good healthcare ideas. There's one that's been on sale recently called McKesson because Warren Buffett sold it. By the way, when Warren Buffett sold Delta, that was the bottom for Delta. So the fact that Buffett's selling it, not necessarily a bad thing to do your own analysis. So here's Molina Healthcare, 4 PE 13. Michael Burry is a true value investor. He does not chase growth stocks or high multiples. He's truly contrarian. And there's Molina Health. I might want to study that one later. Let's see what's his thesis. I'm not sure. I don't know this name. Okay. Factor model is not terribly excited about it. It has some short interest. Maybe there's some bad news around this. I'm not sure exactly what. But there you go. New positions. Some smaller names too. I'll probably take a look at these later. OLPX, BCAB, I do not know those. And he sold out of HCA and Citigroup. Citigroup was a great move at the beginning of the year and really Q4 of last year coming off the bottom when Jane Fraser instituted her plan to restructure Citigroup. I've written about that plan and a few months ago, take a look at that online. But yeah, Citigroup is a great investment for quite a bit of time. Obviously, it slipped and it's recovering nicely too. Still cheap relative to its peer group, but got some declining volume here on this most recent move. But so he sold out of Citigroup. Looks like he did pretty well with that move. HCA is interesting too. So HCA is a business I've been looking at for a long time. Did not pull the trigger. We think is a world-class business. Have not owned it. It's just a little bit too pricey for me. And I think healthcare stocks are bid up. You can see it's like near the top end of its range. I wouldn't buy it here. It's not my thing. But hopefully this goes on sale one day. 16 times forward PE. Kind of reasonable as compared to other healthcare firms, which are in the 20s. Right, but clearly it's overbought. He sold HCA. I think that was probably a good decision for exactly the reasons I just outlined. Who else? So Robert Rabati, I think, is super interesting. I would say maybe a third of what I do is very similar to what Bob Rabati does. So he's looking for quality value in dislocated, overlooked names. Tidewater was one example of that. I'd also say he's an original thinker too. He's less well known, and I like that too. Look, these other big hedge funds, they're so big that they're primarily AUM gatherers, and they have to own a lot of these big Mag 7 names because they're liquid and they can put money to work. If the S&P goes up and they're overweight those names, they'll beat the S&P. They can justify a 2.20 fee. If the S&P goes down, they'll underperform the S&P. But statistically, you're more often in a bull market. So that's kind of the hedge fund game for some of these names. While I'm not a big fan of many hedge funds, although you can still find interesting ideas. And by the way, there's an ETF called MAGS, MAGS, that gives you exposure to Mag 7. So why would you pay 2.20 to a hedge fund? You can buy it, rent it cheaply through MAGS or QQQ. So Powerbot, this is the one, I know BLDR. That's really interesting to see that there. I think that's actually probably a good idea. Actually, HGV, Hilton Grand Vacations, I used to own that. I don't know these other tickers, LXU, WFG, WLK. I'm actually going to do something real quick and see if this lets me copy paste. Not quite. All right, let's do a quick little study here. So looks like he picked up some Apple. He's got small caps, right? I think if you can find some quality small caps that don't have balance sheet issues, that's sounds like a reasonable idea. So NXGS, LXU, okay, we got to take a closer look at that. There's BLDR, this is Builder's First Source. They're one of the nation's leading suppliers of building materials. So Brad Jacobs wants to get into this business. I predict one day Brad Jacobs will acquire this company, BLDR, and probably their competitor, Top Build, which is ticker BLD. I think it's a really novel idea. If mortgage rates are dropping, which they are, and there's a housing shortage, you need building supply material. These businesses have like a 30% return on equity, and they're doing buybacks, and they have a profit margin of 30%. It's a good business. So what about NVGS and LXU? Let's take a look at that. NVGS, okay. Navigator Holdings. Okay. I like that, the small random company no one's talking about. Okay, NVGS, cheap, 4 PE, 9.7. That's interesting. When you got the S&P at a 4P of 21, 20, that's quite interesting. What do these guys do? Fleet of liquefied gas carrier. Ooh, I like that. I like the natural gas thesis. Europe needs a lot of natural gas. We had a bet on Shineri, liquid natural gas. I'll type in that one real quick here. If you remember Shineri, that was here, that green line. We put our Shineri buy call on Twitter, ramped up. That was awesome timing. So NVGS, liquid natural gas, I like because data centers need energy. They're not going to run on oil, too many hydrocarbons. Solar's not enough. Hydro's not going to cut it. Renewables aren't going to cut it. You have cloud cover. Natural gas makes a lot of sense. So that's why we like that thesis. This is interesting, huh? I mean, look, got to do the work on this name, but it's under-owned. It has decent technicals. Retail investors don't own it. And the market cap is 1 billion, so it's a small cap. The ROE isn't as high as I'd want it to be, only at 7%. It's a high margin business, but ultimately, I think the ROE is crucial. And the ROTC, the return on total capital, is not that great either. Price fee cash flow is cheap though. It's cheap. It's cheap. It's a nice business. Maybe we'll give a closer look to that name. That's what I'm saying. You got look at the guys that are less well known and have good track records. I think you can find interesting ideas there. LXU. LXU is another name. Let's take a look. You can see where I'm focusing my time and attention. It's not all the names people are talking about. Okay, I don't know this business. 4 PE 20. Looks like they're having a big earnings growth inflection here. Looks like an inflection trade, which is what Bob Robotti is also known for. So it's been in a downtrend for a few years. Hasn't really completed its base, but maybe it is soon. Still a little pricey, I think. But what do these guys do? They sell chemicals. This is an industrial business, materials business. Okay. Nitrogen-based fertilizers. Okay. So maybe there's a story here. I don't know what that story is. I'm not terribly excited about material stocks right now, for what it's worth. Return on equity isn't that great. Again, like people have different styles and approaches. This probably isn't my cup of tea. It does have 5% buybacks. Okay. I have some other names that have far higher buyback ratios and better ROE. So I probably wouldn't spend too much time on that. But this is the name of the game. You got to research these names and see if you can find a diamond in the rough. And maybe he's right. Maybe I'm wrong. That's totally possible. Acadian Capital. Acadian Capital, very thoughtful investor, underrated in my opinion. So one of their biggest holdings, let me go find it here. I share my screen again. Keep the questions coming. Why don't we do the 13F on our podcast every quarter? Yeah, we are. We're going to start doing this every quarter. Makes so much sense, right? Here's another comment. He still got 30% in Tidewater after the big run. Wow. Yes, that is. Tidewater is great. Been great, by the way. It's an energy services business. Again, I don't think now's the time to buy it. I do like energy services generally. Maybe it is time. Let's take a look, actually. I haven't looked at this name in a while, but yeah, kind of pulled back. 12.74 PE, not so bad at all, really, right? Nice trend. By the way, I think a lot of people think they can only make money in tech stocks. This is another example, which is not the case. This stock year to date was 25%. That beats most of Mag 7 except Nvidia. Okay. 1 year, 44.3%. Okay. So what's Meta doing year to date? Meta's 52%. Meta's been good. Obviously Nvidia's been great too, so I'm not going to pull that up. About Apple. Apple went nowhere, then it went somewhere, right? So year to date, 16, 17%, right? So Tidewater, maybe we take a closer look at Tidewater. No buybacks, some free cash flow. Return on equity is in the strike zone at 16%. It's cheap. That counts for a lot, actually. What else? Acadian Capital. So this is interesting, right? So Planet Fitness. And Acadian Capital is run by Eric Benash, by the way. I'm going to fix up this typo here. Okay. So I think it's actually a wrong move on his part. And because I saw this come out last quarter, I always look at his holding and see what he's thinking. The reason why I think it's wrong, now, by the way, he's been right on this, just to be clear. Let's pull up the chart of Planet Fitness. The reason why I think it's the wrong move is, I don't know, GLP-1s have been a wrecking ball to a lot of, names like Weight Watchers and MetaFast. It's changing behavior. So I don't know that the demand for gyms is going to be as strong. I don't know. Maybe I'm wrong. We'll see. But I look at this and I think it's a bit overextended. Let's see what my factor model has to say about Planet Fitness. Yeah, factor model doesn't like that as well. It says it's expensive. It's a high quality business. That's true. Selling gym memberships is a great business. You get paid whether people show up or not. It's a fantastic business model, right? But I'm not sure whether that usage and consumption will be there. This is something I have not studied very closely, by the way. So these are just kind of off the cuff remarks, not deeply considered views. Okay. He owns Elastic. That's interesting. ESTC is a good business. We don't own it because we put it in SaaS and we think SaaS is in a world of pain. Right. So, but I can see why he might like it. There's ESTC. It really hasn't gone anywhere in the whole year. Right. We think that's most of SaaS. Look, the Ford PE 77. It also breaks my rule. You can't buy something that moves faster than the speed of light. The speed of light is Nvidia. Nvidia is the pacemaker. Okay. Is this growing as fast as Nvidia? No. So why would I own it? And that's probably why this hasn't gone anywhere. Okay. So what else? Okay. Biotech, I think we do separately some other time. Oh, this is interesting. So CVS, and some of you might know, we made a buy call on CVS. So CVS pops up here a few times, it looks like. Scott Ferguson from a fund. Scott used to work with Bill Ackman at Pershing Square, incidentally. So probably takes the same idea of a high quality dislocated asset. That's certainly what I did here. And, there's CVS, kind of higher lows, working its way up. And I think it'll do quite well in a 2-year time frame. When they start turning on buybacks, maybe a year from now, I think that'll be another inflection point. But let me show you just real quick on CVS. This thing has never been cheaper in its history. And, they are Aetna. That's the key thing. And insurance business models are high quality business models. Same reason you see healthcare stocks are doing quite well, right? 8.14 PE, 10 trailing. Compare this to, say, United Health. United Health has a 4% profit margin in this business. CVS has a negative profit margin on the business. These guys are like a 20 times Ford PE ratio, right? Would I want to own this? No. United Health is one of the best performing stocks of all time, by the way, in the last 2 decades. But everyone knows that now, and that's why it's expensive. It's become safe, like a safe haven. And that's when complacency sets in. Elevance, here's another one. Really nice business. People don't really know about. I like this business too, but I'd kind of rather own CVS, but I respect the thesis here around Elevance. They got quality leadership from United Health, 4P, 13.6. Not bad. Why would you want to own a bond when you can own a business like Elevance or Comcast, which has dividends? Why would you want to own a bond? Your upside is capped and inflation eats away at your upside. It's not a real asset. You own a piece of paper if you own a bond, right? You can find equities with fixed income like characteristics and upside. Why not own those instead? That isn't always true, but certainly it's true today. What else? Okay. So Qualcomm was bought by Whale Rock, Renaissance, Tiger, and GQG. Cool. I like Whale Rock. I think Whale Rock, I do look at what they own from time to time. I think they are, but let's see what they're doing now. So they got Nvidia, check, we own it. Google, check. Microsoft, we don't like it as much. Amazon, I have mixed feelings about. CLS, I like that idea. We actually own CLS. I've never talked about CLS. We have like 30 positions, only so much I can talk about. Not trying to give away everything we do either, but look at CLS. That's been nice, right? 14.74 PE despite that run, okay? Supply chain solutions. Technically, it's a technology stock. Okay, focus on logistics, order fulfillment, etc. So let me see if I can highlight any key statistics for you all here. 3% buybacks, ROE 21%. And it's been on the pricier side relative to history. It's been re-rating. Institutions are accumulating this, right? What else? Okay. The Qualcomm idea, though, is I think that's an interesting thesis. Now, Apple is developing their own modem, which would displace Qualcomm. That would cut Qualcomm out of that revenue stream. I think that's priced in, though. I don't think it's a material driver of the revenue. And obviously, Qualcomm is building these Snapdragon chips and selling it to Microsoft Surface. And they're part of this AI PC trend, right? I think we're a year early on the AI PC, but Qualcomm needs to get paid anyway, right? So Whale Rock. Let's take a closer look at Whale Rock. Okay. Right. So they bought Broadcom. These are good ideas. I'd say overall, I get what they're trying to do. Also, they own Coupang, just like a couple other funds here. So maybe we got to take a closer look at Coupang. What is going on there? Yeah, the model does not like it. Okay. Let's see. Pinterest. Interesting. Okay. They also own Nubank, or they've been selling down Nubank. Okay. That's some signal, perhaps, right? I think Nubank's a wonderful business. I just think it's expensive. 27.4 PE. Yeah, it's near the higher end. It's obviously, let me share my screen with you here. I lost that screen. So there's Nubank. Dominant player in that category. I'd rather own Pag Seguera, because I want to hold the business for 10 years and not have to pay taxes and give up a meaningful portion of my return. So if I can find businesses that'll keep going and compound, I might want to sell this when it hits a 27 PE, like Nubank. That's how I look at it, right? Nubank, Pag Seguera up 5.4% today. Not bad. Thank you, Pag Seguera. You're making me look good right now. So Nubank, what about Nelly? Nelly is in looks like Brazil in general is ramping, right? Let's take a look at Brazil ETF. Yeah, look at that. Brazil ETF ramping quite a bit. We bought into Brazil at this green line right here, by the way, because we saw the US dollar rolling over. We were stalking Brazil from here. We was waiting and waiting and waiting. And the dollar broke. And, the Fed's going to cut That means the dollar is going to weaken. That means international currencies do better. And that means commodity export nations like Brazil should do better. And they've got great demographics, unlike most countries around the world. So we like that thesis. And no one here owns Pax Segura. So, original thinking is the best alpha. Okay. So what else? Disney. Ooh, Ally. Oh, these are like some of my friends. These are my friends are talking about here. All right. Ally. I own Ally. Ally's been great. I own 2 banks. Ally is one of them. Okay. 9.4 PE. Trailing PE 17. Interesting. So if these guys can keep up and deliver on their earnings growth, this will do well. This will do well, right? 20, 30% perhaps. So, these guys finance auto loans, are not in the commercial real estate business, and the regional banks are on their heels. So the regional banks can't lend as much as they want to. So these guys are filling in the gap. This is one of the businesses Warren Buffett owns as well. I don't have that much overlap with Buffett, even though I admire his thought process. I try to find smaller companies that he can't get after. This is a $12.6 billion market cap company, right? And he doesn't have a big position. Like, he's too big. He can't have that big of a position in it. That's the disadvantage Warren Buffett has. Okay, so Ally was also bought by Louis Bacon for More Capital. More Capital is very smart people at More Capital. I like More Capital, especially their credit team. Very, very, very capable team. Disney. How about Disney? I love the hate on Disney. So we got to talk about Disney. I think Bob Iger should be replaced as CEO. This is a stock that's gone nowhere in 10 years. Look at this thing. Look at this. 10 years of going nowhere. This is not including inflation, right? 17.24 PE. It's a complacent board. They're not holding the CEO accountable. The CEOs pick the board members. It's kind of a failure in corporate governance. So, yeah, I'm not a big fan of Disney. What does the model say about Disney? The model likes Disney. Okay, model is probably saying, "Hey, look, this is near the trading low. Maybe you're supposed to buy now. I can get that. I get that. But do I want to own this for 5 years? Not necessarily. Maybe it's a trade. Maybe it's not an investment. It is oversold on this RSI basis. It hasn't really done well off the bottom, right? Off the bottom, people buy the highest quality stocks they can get their hands on. Look at Nvidia. Sunday night, I said, hey, I think we'll look back and say Nvidia is probably a good buy now. And Mr. Market seems to have agreed. Nvidia's done well, 122. Right? People look for the Mercedes after the market sells off. Look at Taiwan Semiconductor. This thing has recovered like 60% of losses quickly. This is now a retail favorite stock, by the way. So I'm actually less interested in it, weirdly. So I don't know. I don't like ideas that people are talking about too much. And it's a fantastic business, no question about it. Everyone needs Taiwan Semiconductor. There's China risk around TSM. Micron's based in the United States, right? If there's an invasion, I don't have that risk. Micron 14.4 PE, a lot cheaper. They're powering the Nvidia memory capabilities as well for these GPUs. I think that's an interesting kind of off-angle idea. What else? So on the bottom of this sheet, by the way, if you go to the tweet, you can look at this up. I have this section called kind of front run, tongue in cheek. But these are investments that people have a top position and they're now selling. So Seth Klarman selling FIS. FIS, great business. I don't own it. I do look at it quite regularly. They have an oligopoly position. They sell capabilities to banks. 14.84 PE ratio does look a bit overbought right now, but that's a great business. I might want to take a closer look if it ever goes on sale. All right. What else? We talked about Tidewater, Tiger Global selling JD. Steve Mandel is selling Taiwan Semiconductor. Interesting. Rajiv Jain from GQG is selling Nvidia and Meta. Well, that was good timing on their part, right? I mean, end of June was around peak Nvidia. So, and Meta too was expensive back then. So that might have just been purely tactical rather than a kind of strategic repositioning the portfolio, right? Soros sold Google. So, all in all, I think a lot of those moves make sense. I think the homework assignment is to focus on these less trafficked areas. And if you believe me on the growth to value rotation, We should study it. How about Howard Marks? We didn't talk about Howard Marks, right? TRMD. Let's pull that up. This top holding. By the way, he's got a massive double-digit size position here. We actually already have been looking into this. That's why I know that. But I don't have a strong view on it yet. I'm still digging in. This is TRMD. So, you may know Howard from his quarterly letters. Very thoughtful guy, private equity player, kind of half glass empty. But he's an exceptional writer and quality thinker. For PE 5.3, cheap as hell. Clearly, value stock investor, right? Oil, gas. Okay, so trend is good. How much has this made? Let's take a look. In 1 year, 40%. Okay, so that beats Meta, that beats Google, that beats Apple, that certainly beats Tesla, beats everything but Nvidia. It's a value stock. Okay. What do these guys do? They're a shipping company, and this is a bet on global recovery. So they have tankers, they're moving energy around. I like that too. The world needs more energy. And if you own energy drillers, it's very pro-cyclical. You have essentially a bet on the price of oil. Storage and moving businesses aren't that same kind of exposure. It's a profitable business. So yeah, this is one we're digging into. I don't have a call on this, just to be clear. And we're digging into quite a few names, and we put these names against each other. We're trying to find what's the best marginal use of capital. It's not enough that this idea is a good idea. How does this idea compete with other ideas, right? So ROE 38%. I like that. Okay. Profit margins 50%, healthy. Shareholder yield 16%. I'm getting excited here. Buybacks. There are no buybacks. That's the one flaw here. But look, it's so cheap that people don't care. They're going to buy it. Market cap $3.5 billion is an interesting idea, right? So, in fact, I would claim that more of the interesting ideas we've seen on the value side rather than on the growth side, right? You all know the growth names; they're all priced, right? Efficiently priced. So, David Einhorn. Okay, we got to talk about David Einhorn. He owns Greenbrooks. I know this name. I looked at it. I don't own it. Another hedge fund followed David Einhorn into this, made it their top position. I'm not going to call out the hedge fund, but where's the original thinking? We own MHO. That's been great. In fact, I believe it's been the best home builder in the last 3 months. This is Greenbricks, so 8.94 PE. David Einhorn had one hell of a run with it in 2023, kind of corrected here. And, that's it's a home builder. Guess who else has been buying home builders? Warren Buffett. So he owns a few home builders, insurance companies, energy companies, banks. I think generally those categories are pretty good ideas. Within financial services, I would prefer insurance over banks, however. All right, so got some questions coming in here. Yeah, good question on Coupang, Druckenmiller, early investor. They're probably just holding. Maybe. Druckenmiller is quick to change minds and drop something. Crypto is yet to participate in this rally. That's correct. I think that's because of Nvidia. And, think about capital, like when you pour a cup full of water, the water gets filled, fills the cup, and then it spills to the next cup. That's what's happening here. So in the first move, people rush after the quality assets that they always wanted to own in the portfolio, the blue chip quality assets. So Nvidia is the first to rally, and other high quality names. So I believe that is there. Michael Burry also bought BCAV, small bio company. Really? I don't think Michael Burry would buy a biotech company. That is very different from his disposition. But let's take a look. Let's see what Michael Burry is doing. Okay, so clinical stage biopharmaceutical. There you go. Okay. So he's definitely outside of his wheelhouse. So I'm not sure I want to put a lot of stock into this, but I don't even know what the hell these words mean. So, you got to know your circle of competences. This is definitely outside mine. I'm not going to spend too much time on this. Let's go see what the model says out of curiosity. I bet you it's got like a momentum. No, it won't have momentum because it's Michael Burry, right? Yeah, it's got no momentum there. All right. Model doesn't like, well, it's kind of mixed on this thing. So I don't know what this is, but I mean, it's bombed out. Michael Burry likes bombed out things. It's basing for a while, I guess. It's cheap. It's up 12% today, probably off the 13F disclosure. I'm not sure I understand what that's about. Okay, I'm just looking through some of the questions here. Argentinian banks. I don't know anything about Argentinian banks. I think it's super cool what's happening there, though. Leadership matters. So, okay. I think we're just about wrapped up here. I'm going to see if there's anything else worth calling out. I might say like Horizon Kinetics. These are really sharp energy investors. Interesting that they own GPTC. Well, one, why don't they rotate to a lower fee product? Probably because they don't pay taxes. Okay, so these are sophisticated energy investors, though. They've got great letters worth taking a look at also for idea generation. Again, you're going to see tickers you probably don't recognize. They owned a bunch of like royalty plays in like the Permian Basin. Royalty play would be like, hey, here's land, you license it to a driller. The driller invests all the capex, which takes capital, and then they remit a portion of that to the owners, right? That's a quality business. It's capital light. It's like SaaS-like economics, right? By definition, it is, right? High margin. So why don't we take the top holding there, TPL. Texas Pacific Land Corp. I think this is actually one of those businesses. Texas Pacific Land Corp. Okay. Yeah, they engage in land resource management, water sources, and operations. Yeah, they own non-participating perpetual oil and gas royalty interests across a bunch of land. Yep, okay. Let's take a look at this business. A little pricey for my taste, 43 PE, but they're probably looking at, price to cash flow, 464 cash flow from operations. Still seems a bit pricey to me. It's a great business, though. It's a great business, not necessarily, in my view, not necessarily a great stock. My factor model does kind of like it. That's interesting. All right. So hopefully that was a lot of fun. Hopefully you enjoyed that. I'll share some thoughts in our weekend Lumida Ledger newsletter, and hope you enjoy that. Stay tuned for more. By the way, we're creating more content on Instagram, TikTok, other channels. So look up Lumida in those other channels. You can find that. We'll create a podcast for this too, in case you want to listen more. We also grow via social media, so feel free to share, like, retweet. That's how we grow, create content that hopefully is insightful, informative, and educational in nature. And if you're not in the newsletter, you should join. We wrote about our views on the market last Sunday during this crash. That worked out pretty well. I think we're going to keep rallying for a few more months. I think locally, we've had the immediate recovery bounce, kind of like the easy money off the lows has been made. I think maybe we pull back a little bit in the next couple of days, just hyper tactically. But I think, I think the next 1 to 3 months prices are higher. That's my high level view. All right. Take care, folks. Be well now. Have a good one.